Welcome to my YouTube channel. I am Dr. D.D. Kulkarni, working as Assistant Professor of Commerce, Sri L.K. Koth College of Commerce, Sankeshwar, District, Belagavi. In this video, we will discuss how to solve a case study in consignment accounts. I have selected a case study from the year 2016 question paper of Rani Chennamma University, Belagavi. The case study is like this. Ganesh of Dharwad consigned 200 cycles costing rupees 500 each to Vinayak of Vijaypura. He paid rupees 500 for freight and insurance. During transit, 10 cycles were totally damaged and the insurance company accepted the claim of rupees 4,000 only. The consignee took delivery of the rest of cycles and paid rupees 3,600 for unloading and carriage charges. Subsequently, he paid rupees 5,000 godown rent and selling expenses rupees 15,000. Consignee sold 180 cycles at rupees 900 each and entitled to a commission at 10% on gross sales. He also sent a bank draft in settlement of the account. Prepare the necessary ledger accounts in the books of consignor. Ganesh, after visualizing the risks, expenses and the difficulties involved in consignment business, he thinks to open a branch in the place of consignee. Give your valuable suggestions regarding the thought of Ganesh. Now let us discuss this case study. So in this case study, Mr. Ganesh of Dharwad is a consignor who has sent 200 cycles costing rupees 500 each to Vinayak of Vijaypura. He paid rupees 5,000 for freight and insurance. This constitutes the non-recurring expenses incurred by the consignor. In this problem, the goods are sent at the cost price only. During transit, 10 cycles were totally damaged and the insurance company accepted the claim for rupees 4,000. So this is abnormal loss. The consignee took delivery of the rest of the cycles and paid rupees 3,600 for unloading. This is unloading and carriage charges. These are the non-recurring expenses of the consignee. Subsequently, he paid rupees 5,000 as godown rent and selling expenses rupees 15,000. So these two constitute the recurring expenses of the consignee. He sold 180 cycles at rupees 900 each and entitled to a commission at the rate of 10% on the gross sales. He sent a bank draft in settlement of the account here, and from these details we are required to prepare the necessary ledger accounts in the books of Mr. Ganesh, who is the consignor. The case study is like this. Ganesh, after visualizing the risks, expenses and the difficulties involved in consignment business, he thinks to open a branch in the place of consignee. Give your valuable suggestions regarding the thought of Mr. Ganesh. So now let us go for working note here. So working note number 1 here is valuation of abnormal loss. Abnormal loss. Dear students, we know the formula here. So abnormal loss equals to cost of goods lost plus proportionate non-recurring expenses. Here the abnormal loss has occurred during the transit. That means before the goods reach the place of consignee, the loss has occurred here. So we should take into account only the proportionate non-recurring expenses of the consignor only. So now let us substitute the values here. So 10 cycles 10 cycles into rupees cost here is 500, so 500 each plus, so 10 cycles are lost here, so 10 by 200 cycles are sent, so 200 into rupees, here he has incurred, consignor has incurred only rupees 5,000 here, so 5,000. So now let us simplify here. So 10 into 500, it will get rupees 5,000 plus. So here it will be 250 rupees. So here these two zeros get cancelled. Say 2 is 225. So rupees 5,250 rupees is abnormal loss here. Now we will calculate the amount of the commission payable by the consignor to the consignee here. So calculation of commission of consignee, or simply commission here. So here sales equals to, so how many cycles are sold by the consignor here? 180 cycles. So 180 cycles at the rate of rupees 900 and each. At the rate of rupees 900 each. Or per cycle you can also write. So here 98 is 72, so 1,62,000 rupees is the value of sales here. So therefore commission equals to it is given at the rate of 10%. So 10% of rupees 1,62,000. So 1,62,000, which comes to rupees 16,200 rupees is the amount of commission payable by the consignor to the consignee. So we have given an ordinary commission in this problem. So very simple here. So the next one here is the next working note which we need to proceed. Valuation of closing stock. So closing stock here. So valuation of closing stock, or it can also be called as consignment stock. So consignment stock equals to, so we can now you can see how many units are unsold also. 200 are sent, 10 are abnormal loss, so 190 are received by the consignee, whereas 180 cycles are sold by consignee. So there will be 10 units. So the formula here it will be unsold units into cost per unit. Alright, in short, this is cost per unit. So unsold cycle cost per unit plus, in the bracket, alright, non-recurring expenses by consignor divided by total units sent into unsold units, close the bracket, plus non-recurring expenses by consignee divided by, now you must be very careful here. I have written here total units received, total units sent. Here it is total units received. Multiplied by unsold units close the bracket. So now let us substitute the values in the formula. So there are 10 cycles. So how we got 10 cycles? I will write down here. 200 minus 10 minus 180 multiplied by. So the cost per cycle is given as rupees 200. So 200 plus. So non-recurring expenses. So consignor has paid rupees 5,000 divided by. This is 5,000 for how many cycles here? 200 cycles, that is CY, into 10 cycles plus. Now let us find out how much is the non-recurring expenses paid by the consignee here. It is 3,600 divided by 190 into 10. So why this is 190? Because 200 cycles were sent by the consignee, consignor, but 10 cycles were totally damaged here. So how many are received? 190 here, right? So now let us simplify here. It is 10 cycles into rupees 200 plus this will be 2 zeros get cancelled here. So 2 to 5 it is 250 plus this will be 189.47. So I can take it as 190 rupees. You will get in the decimal values that you can make an approximation to the nearest of the rupee. So that you will get rupees 190 here. So now it is 2,000 rupees. Then plus, so it is a 500, no? So this is a 500 here. I have wrongly here. So it is a 500 rupees per cycle. So it is 500 here. So it is 5,000. So plus 250 plus 190 rupees. So the total will be 5,440 rupees. This is the amount of the closing stock. So all the working notes are over here. We have calculated abnormal loss. We have also valued closing stock. We have also calculated the amount of the commission. So now the next one here, as the problem is based on the cost price here, this is more easy because there is no calculation of any loading. So now let us prepare accounts in the books of consignor here. So again the necessary ledger accounts means here. We need to prepare consignment account, we need to prepare abnormal loss account, we need to prepare the consignee's account, and we need to prepare goods sent on consignment. So I write down here in the books of, or else you can also write consignment accounts. In the books of, so who is consignor here? Mr. Ganesh. In the books of Mr. Ganesh, in the bracket you can write a consignor. So consignment to Vijayapura, or simply consignment account. So consignment to Vijayapura. This is a very simple account. It is just like your trading and P&L account, as it is in the nature of nominal account here. So now, when the goods are sent on consignment, then it will be consignment account debit to goods sent on consignment. So goods sent on consignment here. So here 200 cycles are sent at the rate of rupees 500 each. So 500 each, that comes to 1 lakh here. So 1 lakh. When the consigner pays expenses, then it will be consignment account debit to bank account. So he has paid only freight and insurance, which amounts to rupees 5,000. Then the consignee has also paid here. So when the expenses are paid by the consignee here, then the entry will be consignment to visible account debit to consignee. So who is consignee here? To Mr. Vinayak's account. So Vinayak's account. In the bracket write expenses. So here he has paid 3,600 plus this is his recurring non-recurring expense. Then he has also paid non-recurring expenses rupees 5,000 as go down rent. Then he has also paid 15,000 as selling expenses. So 23,600 will be the total expenses paid by the consignee here. Then when the commission is payable to consignee, then the entry will be consignment account debit to Vinayak's account. Vinayak's account, in the bracket you write commission. So we have calculated as 16,200. Then next, when the sales are made by consignee, then it will be Vinayak's account debit to consignment. So consignment is credited by Vinayak's account. Vinayak's account, in the bracket you write sales. So he has sold 180 cycles at the rate of rupees 900. No, so 900 each. So 900 each, that comes to 1,62,000. Next, by closing stock. Before closing stock, that is recorded abnormal loss. There is abnormal loss also. When there is abnormal loss contribute to consignment. So consignment is credited by abnormal loss, which we have calculated as 5,250. Then closing stock. So by closing stock, or you can also write by consignment stock, or you can also write by balance carried down also. That comes to 5,440 rupees. So there is no need, there is nothing, as the goods are sent to the cost price here, so there is no need of passing the adjustment entries here. So now let us take the sum of this here. 5 plus 4, 9 here, 2, 4 plus 2, 6 here, 5 plus 5, 10 plus 2, 12 here, carry 1 here. So it is 1,72,690 rupees. So 1,72,690 rupees. So now let's find out here. So 90 here. 6 plus 2, 8, 8 plus 8, 16, carry 1, 7 plus 3, 10, 10 plus 5, 15, 15 plus 7, 22, 2 plus 1, 3, 3 plus 2, 5, 5 plus 2, 7. So 27,890 rupees is the profit and consignment. So this is transferred to general P&L account. In the bracket, transfer of profit. So this is the profit which has made by the consignor on the consignment transactions. So the next account we need to prepare is that Mr. Vinayak's account here. So Vinayak's account here, this is in the nature of personal account here. So consignee's account. So I will write down here, so Vinayak's account. Vinayak's account, in the bracket you write consignee here. So consignee here. So when the sales are made by consignee here, then entry will be Vinayak's account into consignment account here. So consignment account. Again same here, so 180 cycles at the rate of ₹900 each. So that comes to 1,62,000. Right? When the expenses are paid by Mr. Vinayak, then the entry will be consignment account to Vinayak's account. So Vinayak's account is credited by consignment here. So it is expenses here. So he has paid 3,600 as the unloading charges. Then he has also paid 5,000 as godown rent plus 15,000 he has paid as selling expenses. So total expenditure made by here is 23,600. Then when the commission is payable to him, then the consignment account of the Vinayak's account. So Vinayak's account is credited by consignment account here. So consignment here, in the bracket you write a commission. So this we have calculated as ₹16,200. Right? So I think he has not accepted any bill here. So final payment is to be made here. So now please take the total on the debit side here. That comes to 1,62,000. So 1,62,000. So now you find the difference here. 6 plus 2 8, 8 plus 2 10, carry 1 7, 7 plus 3 10, 10 plus 2 12, carry 1 2, 2 plus 2 4, 4 plus 2 6. So the final payment to be made by the consignor to the consignor is 1,22,200. So by bank, in the bracket you write a final remittance. So this much of amount is to be paid by whom here? By the consignee to the consignor. That means Vinayak has to pay ₹1,22,200 to whom here? To Mr. Ganesh. So the next account we need to prepare is that the abnormal loss account here. So in this problem you must notice that the consignor has claimed from the insurance company. So that claim amount will reduce the value of the abnormal loss here. So let's write down here abnormal loss. So abnormal loss accounts, of course it is a normal account in the nature, normal account in nature. So when there is abnormal loss, then it will be abnormal loss account to consignment account. So consignment account, so it is a 5,250 rupees is the loss. So now it is given in the problem that the insurance company accepted the claim for ₹4,000 only. So assuming that the claim has been received by the consignor here, so then the entry will be when the claim is received. So bank account debit abnormal loss. So abnormal loss account is credited by bank account. In the bracket you write insurance claim received. Insurance claim received. So received. So it has received 4,000. Right? So now you please take the sum of total here. So 5,250. So here also 5,250. So when you take the difference here, 1,250. So which is transferred to P&L account. So by P&L account. So transfer of balance. Transfer of balance. The next account we need to prepare is that goods sent on consignment account. Goods sent on consignment account. Goods sent on consignment account. So here now let us prepare here. So particulars here. So when the goods are sent on consignment, then the entry will be consignment account to goods sent on consignment. So goods sent on consignment is credited by consignment here. So they are sent, that is 200 cycles into rupees 500. So it will be 1 lakh. So 1 lakh. So this will be transferred to where here? To general trading and paid account or simply trading account. So 1 lakh. So 1 lakh here. So here also write down 1 lakh. So in the bracket here you write transfer of balance. Right? So these are the accounts which are to be prepared in the books of consignor here. So now we need to analyze this case here. So for that reason here we need to find out how much is the profit on consignment. Right? So because we need to advise the consignee whether he should open a branch or not, or else he should continue with the consignment transactions only. Okay. So here analysis of the case here. Analysis of case. So we need to compare what is the percentage of profit on consignment and how much he pays commission to consignee here, right? So we need to, that's why we need to calculate the profit on consignment here. That means because there is an abnormal loss also, that is 1,250 which we have transferred to P&L account, which will reduce your profit, right? So you write down here calculation of percentage of profit to sales, right? So profit on consignment, which we have found, profit on consignment. So we have calculated, we have prepared and we have found it as how much? 27,890 rupees, right? This we have found in by preparing the consignment account here. So less abnormal loss, because the insurance claim is not received at the 100%. So there is a remaining insurance claim which we have transferred to the P&L account, that amounts to rupees 1,250. So 1,250. So when you take the difference here, it will be 26,640. Right? Now let's calculate here. So therefore, percentage of profit to sales equals to profit divided by sales multiplied by 100. So 26,640 into 100 divided by 1 lakh rupees, 1,62,000 is the sales. So roughly you will get a 16.44 percentage. This two is cancelled here, this is cancelled here, so it will be 16.44%. This is the percentage of profit to the sales. But remember here, how much he is supposed to pay commission to the consignee here? 10%. So hardly there will be margin of how much it will be? 6% will be there. So that's why here it is advisable on the part of the consignor to better to start a branch at the place of consignee that in Vijaypura. So for that reason here, what he is supposed to do, what steps he should take here? He should conduct a market survey regarding the viability of those products in that particular locality. So here, if he needs to design a marketing strategy in order to move the products in the market of Vijaypura. And for when he wants to start a branch there, he has to appoint efficient staff, right? Then he should also find such a place which is in the heart of the city so that it can attract the customers of Vijaypura. Then he should also think of a proper management of the branch by keeping an eye on them so that it will be properly managed here. So these are some advices, suggestions which can be given to Mr. Ganesh to establish a branch itself here. Clear? So always a case study may not have a uniform answer. This is what we have made analysis here, because we are comparing the percentage of profit with the amount of the commission which he pays to him, right? So as per this here, it is advisable on the part of the Ganesh to start a branch in Vijaypur instead of consigning the goods. Thank you.